You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. Volatility Views is brought to you by CBOE Live Vol. CBOE Live Vol is the leader in equity and index options trading technology, providing professional and retail traders with the most sophisticated options risk analysis, compliance, and trading tools. CBOE Live Vol offers a broad spectrum of advanced trading technology, including the Live Vol X, next generation execution platform, and Live Vol Pro, the new standard in options trading front ends. Visit livevol.com for a 15-day free trial today. And by Russell Investments, the home of Russell Indexes, which calculates approximately 700,000 benchmarks daily, covering 98% of the investable market globally, including more than 80 countries and more than 10,000 securities. Approximately $4.1 trillion in assets are benchmarked to Russell Indexes. For more information on Russell Indexes and RVX, please visit russell.com/indexes. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. That music means it's time once again for Volatility Views, the premier program for volatility traders. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-exciting, at least we hope so, Options Insider Radio Network. And, of course, you can always find a lot of great archives of this program. We've been doing it for some time. We've had a lot of great guests, a lot of great discussions, a lot of great debates. You may say to yourself, what were they talking about maybe in Brexit last year or during the election at some point or any other odd point throughout history? You can go back for at least the past 4 or 5 years and find those exact talking points. The easiest place to do that, of course, theoptionsinsider.com. Click on Volatility Views on the right-hand side of the homepage there, and you'll see the full episode archive going all the way back to the sneak previews back in the primordial ooze days of the show. And of course, iTunes, TuneIn, Stitcher. Those platforms, some of those may only have the most recent 50 or so episodes. So if you want to go farther back than that, probably the website, the easiest place to go, or indeed our mobile app available for iOS, Android, and the beloved Fire OS. I know I've been promising you guys for a while a greatest hits, a best of type show on the network to help compile all those early moments. This is January 2017, 10-year anniversary, I should say, of our network. So we have a lot of great content to surface for you. So we're working on doing just that. So stay tuned for that if it's too daunting for you to go scouring through our archives. Speaking of daunting, you can also join us live via Mixler. I'm sure that's a daunting prospect for a lot of you people today because most of you are probably attention being drawn elsewhere, most notably by the inauguration of the new president and the beginning of the new administration. But welcome to the hardy souls who can join us there today, who have had their attention drawn away from the inauguration. Mixler.com/ what is that URL? Mixler.com/ options-insider. I know it's not ideal, but it's you just bookmark it once and you will remember it. Lucky for you, same URL every time, every week, every show. So once you bookmark it, you can have it. Of course, you can always follow us via Mixler on the app or on the website, and you get notified the instant we go live, which makes it very easy for you. And all you people are always hitting me up saying, I want the show immediately. I don't want to wait till the next morning for the beautiful edited version to come out. Well, there you go. Nice live version. You could see how the sausage is made. And joining me on the old program today, let's first welcome back from that volatility mecca known as, I believe it's Tulsa, Oklahoma. Mr. Soon-to-be Dr. VIX himself, Mr. Russell Rhodes, the head of education over there at the CBOE Options Institute. Mr. Rhodes, welcome back from Volatility Land, aka Oklahoma.
Well, they moved my program from Tulsa to Stillwater.
Oh, geez, even more deep into the volatility weeds.
Yes, but I will tweet when I'm done with my little "Hey, how you doing?" I'm going to tweet a picture of what the Stillwater Airport looks like with its 2 flights a day from Dallas, and it is nothing beyond comical. It's just plain awesome. I think they actually do everything in a converted mobile home. But I spent the week in Stillwater, played like I was a college student for a little while, got myself in order, got what I'm going to do dissertation-wise and my schedule all down, and eventually I will be forcing you to refer to me as Dr. something. I haven't quite decided.
So let me guess, you're going to do for your dissertation.
Detroit.
You're going to do for your dissertation either earnings straddle study or impact of the Volcker rule on volatility. Either of those two in the works there? Are they in the running?
Behavioral finance and how multitasking gets in there and mucks things up when you get too diversified.
So they wouldn't let you specifically focus on volatility. I see. They gummed up the works. Those academics, they have a want to do that. And I guess Tulsa was just too urban for them. They had to move you even farther out to Stillwater. So better you than me, shall we say. As we move on to yet another mecca of all things volatility, the hinterlands, the deep, dark forests of Maine. We are joined once again, it's been a while, by the rock lobster himself, Mr. Andrew Giovinazzi from OptionPit.com. Mr. G, welcome back from the deep, dark forests of Maine, sir.
Deep, dark. Well, sometimes they are deep and dark, actually. Didn't Robert Frost write about how these forests are? I think I know that. I'm just trying to pull my old poetry back out of my head. No, it is kind of sunny, not freezing, which is a little upsetting to me. But other than that, it's quite lovely. I like it to be about 10 degrees colder, for sure. And there's no volatility in Maine.
Okay, well, speaking of potential volatility and market-related things and Maine, is Maine one of those states where you need to be able to have the right to carry a gun so you keep the grizzly bears away from the schools?
It might be. There's a lot of really weird gun and grizzly laws and stuff here. Like you can't bear. They were trying, you can't bear trap, but you could bear. I don't even know where it is with the bears. Although I did see a bear. I did see bear poop on a golf course only a few miles from my house. So we know there is a random bear running around here somewhere.
You know you're in the mecca of all things trading and volatility when you have to deal with obscure gun and bear laws. So there we go, with the team mostly assembled and beaming in from some interesting parts of the country. Let's dive right on into the volatility review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody, that music means it's time for the part of the show where we break down the week that was and indeed still is. From a volatility, trading, and trending, and development and activity perspective. And like I mentioned, we are streaming this live and recording it here right around noon Central, 1 p.m. Eastern here on Inauguration Day, Friday, January 20th. So a bit of an interesting day. We haven't been doing this for some time, so we have another inauguration under our belts on this program, but not quite the same thing when you're talking about a president going into his second term versus a completely new administration coming into power, and one that is in many ways the polar opposite of the previous administration. So a very different volatility environment, a very different volatility regime to look forward to. The markets kind of, I think, as to be expected, maybe a little cautious given today most of the major indices unched or slightly up on the day, and we're seeing VIX Cash as it has been, kind of, it was soaring over the 13 handle recently, and then today giving up some of that back to right around the 12 a half, actually 12.46 or so right now, within spitting distance of my crystal ball prediction. I should say here at the top of the show, I've been eerily prescient on that of late. Too bad all the spot VIX wagering vehicles don't work very well, or I'd be printing money left, right, and center these days. But it has been an interesting day. I think a lot of people were waiting to see what kind of tone Trump would set come out of the inauguration, hence all of the waiting with bated breath here and all the volatility kind of wait and see in the marketplace. And I think a lot of people seem like they were surprised by the heated rhetoric that he tossed out there on his inauguration day speech. I don't know why those people were surprised. I think that's kind of par for the course for him. I wasn't surprised, but then again, it seemed like a lot of people were. I think a lot of people were hearkening back to his surprisingly conciliatory acceptance and victory speech on election night. If you remember, that was really what turned around the massive sell-off we were seeing in the overnight futures. People were expecting kind of very dire things out of him, and he came out with a surprisingly conciliatory speech, and that seemed to set the tone for going forward. And we've had several months of pretty much nonstop rally as a result. Maybe some people hoping that tone would continue today, and the market's kind of taking a bit of a breather today as they digest all of this crazy new change out here in the woods, or in the winds, I should say. The winds of change, the woods of Maine, the winds of change are blowing through the woods of Maine. Since we're talking about the woods of Maine, he hasn't been on in a while. Mr. Rock Lobster, we'll start with you. Interesting time to be coming back on Volatility Views. A lot is cooking out there. What's your take on the week that was and still is from a volatility perspective on this here inauguration day, this historic day?
Wow. I think mostly it's a lack of volatility. I was just looking at the volatility in the vol products. The only thing dropping faster than the volatility, the vol products themselves, is the volatility in the vol products. It's getting the schmack-daddle put out of it. So it's a subject we had talked about last night and this week. I have a couple of vol positions for this and our fund as well. So it's not totally unexpected. Maybe I guess the guy's delivering what he said he's going to deliver. The president, not hugely surprising, but the devil will be in the details and how things work. It was definitely it sounded, at least I don't know what people were expecting from the speech, but it was more like a get down and get to work and solve problems or do things speech. It wasn't more of a rah-rah, like let's, happy dance kind of speech. So anyway, I don't know how the world's going to take it, whether you like it or don't like it. But I don't think it was surprising. In fact, it wasn't too surprising. Volatility doesn't care very much. That's the bottom line. We're not really selling off. And I think there's the market is more, I feels like it is an expectant anticipation for what might come. I think the funniest thing though overall is how ever since Donald Trump was elected, he's using Twitter all the time. Twitter's done nothing but gone down.
That is interesting. That is really interesting.
I don't know if all the tweeting helps Twitter. I figure it might. But if you've just been buying stock, you keep getting it at lower prices. So anyway, I guess that works for Warren Buffett, but
it's kind of funny because I can't remember another time really ever in the history of being in this business for a while where I've seen so many people talking about the impact of presidential social media. Obviously, that's a relatively new thing in and of itself. There's even been some industry panels already on trading under the era of Trump's tweets. And you're right, and to see Twitter taking it on the chin under that same time frame is a little bit interesting. But I think
it's definitely a counter. But do you remember Obama loved the BlackBerry, right? And
that seems so anachronistic now. Will he be able to keep his BlackBerry as president? Right. How tech forward?
And it was the top for BlackBerry. It was like $160 stock, and the future was awesome, and literally, what was that, 2008? And by 2009, Apple just destroyed them. It was it. I mean, it was a stock that never came back again. So I think, you almost have the opposite. So we'll see what the reach of social media is, or I think as a news tool. You know what? If you keep trying to do the same things over again, you'll never do anything new. So it'll be interesting to see how all of this ends up playing out, because, like it or not, once a president starts doing something, it tends to be the precedent of the next president, unless it's a really bad idea. So since we don't really know exactly how it's going to work out yet, this could be, this could be a trend going forward, and maybe everybody starts tweeting stuff. I don't know. Politicians get more aggressive on it. If it gets people votes, probably somebody's going to pick up the use of it. So anyway, that's it's from a vol point of view. I just thought a couple of those things were interesting. And you could also say, just name volatility. I'm looking back at volatility in a lot of the bigger technology names. They're at levels that I didn't think really they could get to, with the election and everything coming. Apple volatility, long-term vol. I mean, we can get to another part of the show, but just very, very, very inexpensive. It's almost like they don't think there could be any upside either, which is strange at the way things are being priced right now.
It is strange. A lot of things strange is a good description for a lot of the things that are going on these days. Very, very strange things in the air. And speaking of strange, if you're not following Mr. Rhodes on Twitter, make sure to do so. Just follow us at Options. We'll retweet him his pictures of the scenic and lovely and epic Stillwater Airport, not to be missed. That said, Mr. Rhodes, what's catching your eye from a volatility perspective in this very strange, some may say historic week?
Well, as long as everything seems to be smoothly transitioning, we're going to see volatility under pressure. I was watching a little bit of the commentary around his inauguration, and it's not like we're going to get as much immediacy as far as the changes that he wants to implement in place, because he doesn't have everybody in their offices quite yet. The cabinet members haven't all been approved. Their deputies haven't even been named. So, with volatility, VIX is a 30-day outlook. The first 30 days of Trump taking over, hitting the ground running in government terms is a little bit different than hitting the ground running in a lot of, in the real world business world terms. So I think any tension going into this weekend might have been with respect to any sort of chaos in Washington, D.C., and not digging any deeper than that. And that we pretty much have a lack of that right now is what's putting pressure on volatility. The one that I'm a little bit surprised at is VVIX. I feel like looking out to February and March expirations for VIX options, that Trump is going to start to have an impact in those dates. So VVIX coming under pressure is a little bit surprising to me. It seems to have been holding up fairly well relative to VIX for months now. It's something Mark Sebastian would bring up a lot. So, the volatility of volatility products, as Andrew mentioned, that's the one that makes me pause just a little bit.
Yes, good old VVIX, the volatility of volatility, the volatility of the VIX. Always a fun concept for a lot of newcomers to volatility to wrap their head around. Maybe, what do you mean? What do you mean it? That this is already a derivative of a derivative. Now you have a volatility of that derivative. Blows their minds. Always fun to watch. Let's get into the VIX Futures front. Always an interesting area, and always an area we could see a lot of the impacts and what the market is thinking playing out right in front of your eyes. Many times we've joked on the show in the past that the VIX Futures term structure, the answer to all volatility questions. That is a joke, but only slightly so. It is the answer to many, indeed, of those questions. And like I said, as we're recording this, the VIX Cash right around 12:30 or so, 12:34 actually, it's getting even closer to my prediction of, I believe, 12 and a quarter. So we'll see if we can hold this level for the rest of the show, which would be perfect. That would be nice. And of course, we're seeing, was that front month to cash premium kind of ebbed and flowed a bit over the past few weeks. It got as low, I should say, as about a point or so last week, and getting a little bit more distance behind it of late here, with about a point and a half, a little bit more out there between the Feb future and the cash. You go all the way out a couple of months to March, and then you're talking not quite 3, but pretty close, about 2.7 or so out there. Actually getting close to about 3, a little closer, widening out a little bit closer to 3 right now. So those premiums getting a little bit of a boost here in the early days, the early minutes, I should say, of the Trump regime kicking things off. Mr. I almost said greasy meatball. I apologize for that. Mr. Rock Lobster. What, if anything, is catching your eye or perhaps surprising you out there in the realm of all things VIX Futures this week?
VIX Futures, you know what? I guess the only thing that surprised me was the mini rally we had on a day or two ago. Even had a couple people in my chat room yesterday when there was a rally in vol. Just like, why don't we just buy puts in the vol products? Because from a vol future point of view, you're starting this morning anyway. I thought it looked like they were pricing VIX Cash to kind of continue a decline. Not a big one, but a little one, and that's what we got. So you're starting to see what I would just say is like a normal contango. The February future is almost $2 over going into the close. It probably will be by then. You're going to be a quarter off your prediction longo, I think. But
I'll take within a quarter of a point. I'll take it.
You're still good. Now, did you just as a side, have you kept track of all of the
that was supposed to be Russell's job, interestingly enough, and when it became clear that he was not going to win for the year, suddenly those results were not tabulated. So,
for a doctor of statistics in the VIX, you would think.
Funny how that works. He's like, wow, Longo won again. I don't know if this week's going to make it into my spreadsheets. The problem was, too, he was the resident buyer of all things VIX last year. Like every week after week, if he could buy calls in the crystal ball, he was doing it.
I know.
And we all know how well that worked out over the course of last year.
One-way trip to
Who won last week?
Yeah, you had your first victory in quite some time, so congratulations. Actually, no, last week. Well, we haven't gotten to that yet. You weren't here last week, so we get to that.
On last Friday, 2 weeks ago.
2 weeks ago. Yes, and I believe you notched.
On last week's show, who was the winner?
I believe you notched your first victory by, I believe, reversing your long trend of 2016 and actually fading vol for the first time. And lo and behold, you won. So
exactly.
See how that works? I think the mean disparity between my pick and Russell's was, I don't know, about 2 points on any given week. He was just buying so much vol every week. It was pretty hardcore. But
I wanted to make a career out of picking a crash, because that's all you got to do. You say it every week, it happens, and then you're set.
It was like I was the VIX Cash, and Russell was like the March future out there. He was just he was way, way above me on any given week, which was kind of interesting. So it was a battle between me and the meatball for victory, and let's just say it was not the meatball. All right, Mr. Rhodes, any thoughts on VIX Futures before we move on into your own personal segment, sir?
I think I remember when I was on the floor like 20 years ago, and we had this really young runner that worked for our firm in the bond pit. And one day we're just kind of sitting around when the market's dead on a Friday, and he goes, I think the market is right where it should be right now, which was just one of the dumbest things I'd ever heard young Ted say. I called him young Ted. And he looked like that guy that was the page on 30 Rock. So, but I'm going to say something kind of similar with respect to the level of contango. I think we're kind of at an expected level of contango, with going through a little bit of uncertainty, but not as frightening amount of uncertainty as people would have thought, like the night of the election before the conciliatory speech. So, the futures, a buck 50 or so going out to February, and which is, I think we're in a 5-week cycle this time, and March up over 15. That's we've got a Fed meeting between now and the February one. We've got a couple of employment numbers. You can actually see a bump in the implied volatility of at the money VIX options between the February 1st and the February 8th expiration, kind of indicating that the next employment number is what the market's thinking about. So, as young Ted said in the late 90s when I was on the floor, I think we're right where we should be.
Speaking of right where we should be, we're right where we should be right now for Russell's Weekly Rundown.
Now, Russell's Weekly Rundown.
All right, listeners, you guys know the drill. It's time for sometime in the near future, Dr. VIX, to dispense about the discourse about the weekly VIX options activity that's catching your eye. Mr. Russell, interesting week out there. Anything catching your eye this week?
There were a couple of trades that I kind of liked in the weeklies, believe it or not. Yesterday, I saw somebody do something very similar in the February 1st and the February 8th options. In the Feb 1 options, they bought the 16 calls and sold the 24 calls. And in the and they did that for I think 34 cents on that one. And then they went out to February 8th and they did the same call spread, but they also sold the 12.5 puts and managed to do that one for only 24 cents. So somebody and they were both 1,500 lots. So I'm just going to guess it was the same guy twice. Somebody's looking for an early February spike. Maybe even a late January sell-off in the equity market as well. Kind of like that trade. Not a whole lot going on. It looks like it might be some sellers of some January 25th VIX calls going out there today as we start to not have the volatility event that is the Trump presidency. So just a couple of setups looking for a potential spike using the weeklies, and maybe a little bit of the January 25th options. You can look at the money implied volatility. That's the biggest loss among all of the different VIX expirations. The implied vol of those is down 6.7 today. The February 8th is actually up slightly. So I guess we've gotten the inauguration past us and we're braced for maybe the employment number. So, and then after the February 8th, it drops right off. So looks like that's what they might be targeting.
Yeah, it was an interesting week for the mothership VIX options, a fairly heavy week. Maybe not surprising given what we had on the docket for this week. May surprise you, though, that today actually fairly light. The ADV hovering around 564 out there right now. And today, so far, with the inauguration pretty much behind us, only about 300,000 contracts. Looks like a lot of people really kind of keeping their powder dry going into this announcement or the speech, I should say, are really kind of waiting and seeing. And so far, at least, the paper not really lighting it up today. But it was a fairly heavy week. Yesterday, about 405,000, so that was kind of lighter. But earlier in the week, Wednesday, 850, so well over that ADV. And Tuesday, right around 1 million, so a very aggressive day on Tuesday. Monday, of course, closed here in the States for the Martin Luther King holiday. And all in all, still a fairly light VIX call to put with about 2.9 to 1. There has been a lot of activity in the Feb upside. We'll get to that in a little bit, but it seems like with Jan coming off the books there, a lot of the call heavy nature seems to have gone away, at least for the time being. If you follow VIX, this thing can get up to 4.5, 6 to 1 sometimes calls over put. So 2.9 to 1 is not what I would call heavy overall right now. And in terms of what's lighting it up out there, like we said, Feb coming on strong this week with the Feb 21s, the ever optimistic Feb 21s. Remember I said earlier that Feb future right a little bit under 14, so and the March future right around 15 and a quarter. So those Feb 21s are pretty optimistic no matter how you break it down. Those are number one with a bullet, about 300 383,000, nearly 400,000 calls open on that strike, which is a pretty hot paper. If you know, of late, the last few months, the volume has been pretty light, and we were seeing number ones on this list with 164,000 contracts. So it was a pretty light period. It's nice to see number one on our top 10 list again this week, threatening at least the 400,000 level. Then we go down to 310,000 contracts, number two. The Feb 17s, perhaps a little bit more reasonable strike there. And if you're not done with Feb calls, nope, they're not. Number three, the Feb 22s with about 250,000 contracts open there. Number four, the Feb 20s, 215. So there was a lot of Feb call activity. We'll see if this continues in subsequent weeks. We probably will see that VIX call puts surge ever higher, at least in the initial blush. A lot of this paper perhaps worried about or favoring or specking on some near-term upside for VIX here post inauguration. Feb 16s, number five, the far less optimistic Feb 16s, 177,000 contracts open there. Number six, you can't go a week without the 30 strike coming in. This time it's the Feb 30s, 173,000 contracts open there. Number seven, all the way down number seven to find our first put on the list, the Feb 12 half put with about 154,000 contracts. Number eight, the Feb 23s back on the Feb call strip, 146,000. Number nine, the Feb 28s. Ever optimistic Feb 28s, 144,000. All the way down to number 10 for our first and only March contract on the list, the March 24s, with about 139,000 contracts open. Total of about 5.4 million, about 4 million on the calls, and about 1.4 million on the puts. It has been an interesting week. A lot of stuff going up, maybe worthy of note. Mr. Rocklops, I know you guys over there in the pit chat, always watching VIX options activity all week long. Anything catching your eye out there this week, sir?
Well, there's two things that have caught my eye. One is a serial VIX options are down into the 70 volatility range. So that's VVIX is getting really cheap. So of course we have our Vol Master class to help people trade that kind of stuff. But that's one thing. So it is a not normal. Let's just say it's for vol to be at the very bottom of the range. The market's at all-time, or near all-time highs. Anytime that becomes an extreme always gets my attention as far as trying to create something. So that's, mid 70 vol for Feb cycle is interesting because options are just VIX options are dirt cheap. The second thing I thought, which I thought was funny today, is the biggest block volume is a put in VIX. It's not a call. It's not a fade the inaugural, whatever. The biggest block is a put. Somebody probably closing the Feb 12.5 puts. There's massive open interest on that line, and VIX has kind of been right around that 12.5 range. I think we settled 12.5, but this week. So there's nobody. There's just so relative for VIX. There's a lot of volume still, but nobody is buying those massive blocks of calls today. So from a strange, and I'm generally contrarian. So if nobody wants it, then I generally think maybe I want it. Or if anybody wants it, maybe I think I should sell it to them. So that is, as far as the way this trade goes, I find that strange. Again, any day where the vol products and VIX are kind of crashing is always a good day to cover. But I think, strangely enough, they're very, very cheap options for right now. And I can remember a time in the 90s and even in the mid 2000s, like almost every day. Oh my gosh, in my third decade trading options. So, but there can be periods of time when the first vol gets low, and maybe because this is the first period where I've been able to act, I keep an eye on the VIX every day. It didn't happen that way in the early 2000s or the 90s because it didn't exist. You just looked at, index at the money vol. So it's, maybe we are seeing a sustained period of lower realized vol. See, that's the thing that I'm kind of trying to keep my eyeballs peeled for, because I've lived through those periods before when the realized vol stays in the single digit for extended period of time. It's different trading. you definitely want to be riding whatever trend you can. But, implied volatility can get very low. So as I look at this, I think, well, maybe there are a lot of other old guys thinking the same thing, and they're just backing off, looking for the next sell-off. So whether they're all wrong or not, I don't know, but it's certainly it is certainly interesting that nonetheless that on a day like today, when there's kind of a contentious election, the only size paper is closing some puts in VIX. So doesn't mean there aren't little blocks, but normally you get those pretty good sized blocks of calls, and they're just not trading right now.
Just shows that it takes some crazy change to the order of things, like an inauguration, in order to get VIX puts to light up the day. We know that's not true. We've seen a lot of VIX puts printing in recent months, but it is an interesting fact on Inauguration Day that it's those 12 half puts leading the charge out there. Speaking of the charge, it is the beginning of earnings season, so we like to reflect and look back on some of the interesting developments from the week from that. And the big one this week, if you were watching, I know a lot of you guys were, was, of course, the old Widowmaker surprising yet again, this time to the upside. Of course, I'm talking about Netflix. They closed right leading into earnings right around 133.25. They were pricing in about a $12.60 straddle, so right about 9.5%, and that turned out to be fairly prescient, at least in terms of the overnight move, where it gapped up to about 145 in the after hours. Of course, we all know the argument about you can't trade these options in the after hours, and I won't get into that again. But if you were hedging stock, it actually was a fairly prescient bit of pricing on behalf of the market makers. Then it opened up at 142 the next morning, so it gave back some of that, and then it proceeded to trade down to about 138, of course, the course of yesterday, and today up about half a buck to right about 139 or so right now. So long term, over a couple of days, if you were patient and popped your tums, the premium writers did all right, but it seemed a little ugly there in the initial foray. But kind of interesting, Mr. Rhodes, I know you like to watch a lot of earnings volatility. Kind of interesting that one of our first big kickoff names for the quarter actually seemed to have been fairly priced in the initial blush, and then maybe after a couple of days here, a little overpriced. But still, the market maker is doing a fairly decent job in the initial blush there. What are your thoughts here on Netflix, and maybe any other earning straddles or volatility that caught your eye this week?
Well, believe it or not, that is the smallest percent move that Netflix has ever had off of an earnings announcement.
Wow.
Yeah, its average move over the last 3 years has been in the double digits, and I'm digging through numbers as you were talking. I found one 4.4% move. You know what? Actually, I'm going to go back to pre-Great Financial Crisis. That's the biggest move or the smallest move we've had in Netflix since 2007 off of earnings, which for most traders, that's all time. So it was definitely, it's interesting because the last 3 quarters, we had 19%, drop of 13%, drop of 13% again. So I guess they were overdue for a reverting to the mean around that one. I know, I think Peter Lusk over here in the office next to me pointed out that somebody was selling the 95 puts that expire today and taking in like 50 cents or so in front of the number. That's a, like 30, 40-point move against Netflix that somebody was getting some premium for. So they were really expecting a lot more, whoever they are, were expecting a lot more than what we got out of that one.
Yeah, you're right. That is a little bit surprising. Netflix has been known to move a wee bit. If only we had someone out there who was studying these earnings straddles, perhaps for a dissertation, and would have all those numbers readily at hand for what Netflix was pricing in last quarter and the quarter before. Oh, how perfect that would be, instead of behavioral finance or whatever it is you're actually doing out there. We want the useful dissertation, sir. Bring us the earnings straddle study. And then
I want to win a Nobel Prize.
Earnings straddles is the road to the Nobel Prize, sir.
I want to get a free suit from the King of Sweden.
Nobel schmobel. Who cares? You can't eat a Nobel Prize, Russell.
Yeah, but
you can eat the $1 million that you get with it. Yeah,
that $1 million bucks will buy you an awful lot of, and then we just edited Russell. Okay.
But you're right. The practical stuff doesn't tend to get favored upon by the Nobel Committee, with the exception of a few things in the option space back in the past. Who knows? Maybe you'll break the mode, Russell, with your groundbreaking straddle study from earnings that we're looking forward to forthwith. Meanwhile, let's move on to the commodity space. There has been a lot of volatility going on there of late, by the way. Of course, if you are so inclined to talk about all things crude vol, gold vol, treasury vol, whatever catches your eye from a volatility perspective on the commodity side, come back in about 1:30 or so Central, 2:30 Eastern for TYFO this week in Futures Options. We'll be talking all sorts of in-depth about these kind of topics, including the WTI Brent big battle that's emerging there on the spread as a result of Trump, as well as crude vol, gold vol, maybe a little bit of some election impact on volatility and all sorts of other fun stuff. 1:30 p.m. right back here in the Mixler. If you can join us, if not, of course, you can always find us after the fact on all the major outlets. This week in Futures Options, search for it. All right, and looking at all things commodity vol. Luckily, our friends over there at the CBOE put out a lot of indexes towards these exact things, including, of course, our crude VIXs, USO, VIX OVX, and the TYVIX OIV. Both of them right around that 30 level again, which has kind of been an interesting level. They kind of been vacillating around that for the last few weeks. So we're seeing, crude vol not exactly bottoming out, but kind of maybe vacillating a little bit here, as we've seen kind of WTI itself kind of vacillating a little bit here. It was for a long time. There was a premium to the puts and a discount to the calls. So if you wanted to get any bid in WTI, you had to really have a decent sell-off to get some of that juice back in. Of course, post OPEC meeting back in, I believe, mid-November it was. That's when, of course, you saw the calls starting to come to life again from a skew perspective. And now some of those near-term calls actually have a decent amount of juice. Long-term, it still is the puts leading the dance, but near-term, the calls are more expensive. So if you are indeed so inclined to gobble up some calls or perhaps do some of those bullish risk reversals that were so popular back in the day in WTI, not so much out there. I'm looking at all things gold vol, again, courtesy of our friends over there at CBOE and GVZ. Their gold volatility index hovering a little bit shy of the 15 handle. That puts it pretty much near or around the low end of its 52-week range. So gold, of course, if you've been following it, has been an interesting story to watch. Sell-off, 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 now a bit of a rally. Is gold back? That'll be an interesting topic for debate. And we don't get to it that often on the show. Maybe we should talk about it more. The Treasury VIX, TYVIX. That's, of course, the 10-year U.S. Treasury note VIX, hovering right around about a 560 or so. Again, that's one of the newer entrants in the CBOE VIX commodity vol pantheon. And again, also kind of around it looks like in the middle to end of that range, or maybe a little bit higher on that, going back about a year. Anything out there, Russell, I know you watch all these indices and many more. Anything out there catching your eye from an overall commodity vol perspective this week?
Silver was up slightly. Oil and gold have gotten hit a little bit. In the energy sector, ETF is kind of flat as far as volatility goes. Everything as VIX seems to be leading everything down today, as I guess all the markets were a little bit braced for how today was going to go, and things have gone particularly well. The British pound was, deviating just a little bit. British pound volatility remains elevated relative to history, just because the story that is Brexit continues to work its way into the pound. And I know that because Maine is almost part of Great Britain, and Maine would love to make a Megxit and maybe become part of Canada or something after we got our new president. I'll bet you Andrew has something to say about this.
I don't know about a Megxit.
I like that, Megxit.
I like that, a Megxit.
That may imply different things to certain people who see that at first blush, think of a Megxit, but that said, applying it to Maine is also interesting.
It's also the Maine T-shirt, in New York. I love New York. How I love NY. How those are really popular. The I Love Me T-shirts are not quite as popular as the I Love New York T-shirt. So, but as far as the pound, so here's something I found curious. Now, if you're pricing volatility, which I try to do, I'm trying to price how the pound is going to move. And you have the prime minister kind of kicking it back to Parliament, saying breaks it in, breaks it out. Maybe we do, maybe we don't. And, you know, I find it I think, isn't there the possibility that they could kick, they could actually stay in? And what would that do to the pound? Isn't there the potential for a huge move on that?
I don't think that market is pricing that in at all. I don't, so the answer to what you're saying is, yeah, if, if somehow something dramatic changes and they decide to stay in, gosh, I don't think the option market's pricing that one in at all.
Right. I don't think so either, and that's why I thought there could be a potential opportunity. Liked Ofer's with the VIX thing. He's like, our fund sells volatility. Jeez Louise.
He's giving you a hard time. We'll get to that. We'll get to the listener hard time in a little bit. But you're right. It is kind of interesting to watch out here. I like the Mexit. I like the price in of Mexit probability for our next show. But you're right. The pound, interesting. We're actually probably I think we have some listener questions about some currency vol. So check it out. Coming up on TWIFO at about 1:30. Meanwhile, you mentioned some of the listener comments. Let's get to them with our volatility voicemail.
It's time to share your thoughts and opinions with your fellow volatility traders. It's time to check the volatility voicemail. Make your voice heard by dialing 779-669-4VOL. Posting a comment on the optionsinsider.com, sending an email to questions@theoptionsinsider.com, or posting your questions to twitter.com/options or facebook.com/theoptionsinsider.
All right, everybody, welcome to the Vol voicemail. Like the man said, this is the portion of the show where you guys take the reins. Mr. Rock Lobster getting some umbrage, so let's start there. It's always kind of funny. Of course, got Ofer here, your buddy. Yeah, I think formerly of Live Vol. Near and dear to the show. Now he's over there, I believe, running CMLViz. .com. Easy to say that 5 times fast. And he was responding to your comment, Mr. Rock Lobster, that VIX options are dirt cheap. He wrote in with looks like a little bit of a back test saying, nevertheless selling a 25 delta strangle over the last year has been a winner in VIX. So there you go, Mr. Rock Lobster. You are challenged. Defend, sir.
There are smarter ways to buy volatility than just buying the 25 delta strangle. That's all I'm going to say. However, that would not be my favorite VIX strategy.
Well, he said selling the strangle.
Oh, no, he's selling the strangle, but that would imply that I would go out and buy the 25 delta strangle.
I'm not sure if he's saying selling it to you. He's just saying selling it in the general sense. The royal selling.
He's selling it to me right now. That's what he's saying. He's like, it's cheap. You can buy it, buddy.
Sold to you.
That would not be my preferred way to do it. But you know what? Ofer can take our Vol Masterclass and sign up, and I'll be happy to explain it to him.
Ooh, firing back across the bow there, saying, you know what? Pay me, and then I will teach you the proper way to trade these things. I like it. A little bit of umbrage from the mainster. Speaking of a proper way to trade, we asked you guys this week. It is earnings season. Our question of the week this week, taking a little bit of a fun Star Warsian vibe with it. We said, hey, earnings season awakens. How do you play earnings using options? Are you an earnings #Jedi or #Sith? A lot of people firing off on this one, as you might imagine. We gave you 4 choices, so really kind of 3 and then another. We made it very straightforward. We didn't get into Iron Condor swaps, anything like that. Just said, hey, dark side, so are you short premium? Light side, so are you long premium? Or no side, whatever that would be in the forest, the gray side, I guess. So you avoid earnings altogether. Or other, and some people have replied with some other ideas. We'll get to those if we have time. But Mr. Rock Lobster, we'll start with you. What do you think? What is your vote, if you have one? I think I know which way you're leaning. And then what do you think is winning our poll?
Okay. Mostly, I think the post-earnings vol sale is more reliable than the pre. What's winning our poll? I think people still think you could, sell pre-earnings vol and win. So I think that's winning. even though from just observation, I think most people can't do it enough to make it work as far as the number of samples you would need per cycle. So that's what I would say on that one.
So you say dark side is winning our poll, and you, I think, as I expected, leaning towards the gray side of avoiding earnings.
Pretty much, although there's some of the stuff with Apple right now is looking a little intriguing, but that's another subject.
Getting lured to the dark side yourself, sir. Mr. Rhodes, save us. So what is your way, if you have a side of the force you prefer? And then, at least when it comes to earnings, not in general life. We know how you lean in general life. And then what do you think is winning our poll? How long have you been saving that one up for?
Short premium, but what I have actually found that can work is, let's say XYZ reports after the close. You can get some opportunities on the open the next day. It's not like you get the full volatility crush immediately on the open. So, there's a short premium, but short premium maybe right at, as the market opens after the announcement. So, but definitely short premium into earnings. I know for a fact that if you consistently do that, you're going to make money with a few blowups.
With a few blowups. Yeah. one or two in
like
there.
Any short volatility strategy, that's what's going to happen.
Yep, you got to weather the storm, and then the calm, tranquil waters will hopefully keep you in the business. Speaking of the business, a lot of our listeners lean in dark side. They're feeling what Mr. Rhodes is laying down there. 41% saying dark side, and it's still a tie. It's been a tie for a while now between light side and no side, so about 25% each, with about 9% coming in with others and people's asking questions about short puts and things like that. All right, see if we can get to a couple more questions here. Let's see here. Here's a very simple one from Maryanne, but it's kind of interesting. We get a lot of these types of questions. We'll just pick hers. Maryanne asking, how long do we think this period of low volatility will last? There's a lot to unpack here in a question like this. We've talked about this before. Low volatility, obviously extremely subjective thing. Depends the frame of reference you're looking at, what else is going on contextually in the broad market, where the S&P is, where things like skew are, all these other things that kind of factor into that just low. So when you see, hey, VIX Cash is south of 15, aka volatility is low, not quite. And as we also talk here on the show, obviously the VIX Futures pricing in a little bit more vol than that. So the VIX Cash, take that with the grain of salt that it's worth there. There's other factors you have to look at when we're talking about low. But I can see where she's coming from. She's heard a lot of the drumbeat about VIX over time having this long-term mean of 20. So she's coming to us from the point of view that VIX now is cheap and that it has to mean revert. And we get, you might imagine, a lot of these emails and tweets on a regular basis. I don't know, Mr. Rocklouse, you probably get a lot of these in your volatility classes over there all the time and in the pitch chat. What do you say to Maryanne and all of her ilk out there who think VIX is crazy cheap right now?
I think Ofer had something to say. I like it though, because he's good at throwing down stuff. Just because something's cheap doesn't mean it really necessarily is a buy. The problem with looking at a vol product like VIX is when I like to trade it more when the vol's actually rising. Because I tend to want to ride the vol trend when it's happening. When it's kind of sitting here in just fallowville, I prefer to buy puts and kind of buy strangles and things like that. But the puts are already in the money a little bit, or kind of in the money because of the futures. They look a little wonky that way. So you could spend a lot of money buying VIX calls waiting for the pop. It becomes very expensive that way. So, unless you have something on the other side that's trying to generate some dollars to pay for those VIX calls, as cheap as it gets, it's still it doesn't make me just want to go out flat buy VIX calls, but it makes me interested in setting up the types of strangles and some of the other constructions that can make decent money in the VIX.
Mr. Rose, any thoughts? I'm sure you over there at the Institute get this question all the time as well, which is kind of why I surfaced it. What do you say to Maryanne and all those out there who think vol is cheap? And if you have a thought as to its duration, feel free, sir.
It's when you use the word cheap, that's kind of a misnomer. It's more that it is near the lower end of the long-term range. Typically, when VIX is low, it actually is subsequently it's overpriced relative to the realized volatility that comes after the VIX reading, which basically would mean that with VIX at 1226 right now, let's say it's closing there today, if you take the next 30 calendar days of realized volatility, it's probably going to be in the mid-single digits. Typically when VIX is higher, it's not as overpriced. So when people talk about volatility being cheap or expensive, it's always relative. It's usually relative to what is to come. When it's low, what ends up subsequently happening is usually pretty darn low volatility. She also asked, when is this going to come to an end? And I do have the answer for that.
Wow, I want to know.
Do you want to give it now or in the crystal ball?
When the S&P 500 sells off hard.
Oh, well. Spoken like a true academic, sir. On that, I'm going to mute Russell's mic in shame, and we keep on rolling into our final segment, the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, not to toot my own horn here or anything, but I did pick 12.25 last week, and as of right now, we're at 12.20. So there you go, Dr. VIX, soon to be Dr. VIX, degenerate buyer of volatility that you are, sir. Actually, you were off last week, so I can't mock you too much. Our guest over there, one of the Thompson twins, I believe it was Mike Thompson, over there at Typhon, also apparently a volatility buyer. He was buying what the futures were selling at the time, which they were pricing in around a 14.5 level going through the inauguration, and that's exactly what he said. He said 14.51. Fortunately, a little bit rich for him. The greasy meatball was going way south. He said the VIX was going to settle below 11 during that period, and he actually picked 11.5. So once again, unfortunately, Mr. Rhodes, I know it irks you to no end, but I shall claim the victory here yet again. I guess I need to start investigating the VIX up, VIX down, and a few other of these products because, got to say, been pretty prescient of late on the old spot VIX prognostication. That said, I will have pity on you folks because when I go first, it's even easier for me to claim victory. So I will go last this time. I will allow you guys to go first. So that will kind of box me in a little bit and take away some of my choices. So let's have Mr. Rock Lobster go first because he hasn't been on in a while. And let's see if he can swing for the fences and knock one out of the park.
Let's see. We have all those big tech earnings next week. I'm going to say 1201 VIX.
12.01 for the Mr. Mexit. I do like that. All right, and someday in the near future, if you can ever pick VIX right, Dr. VIX, what do you got for us?
1, 2, spot 3, 4.
I thought you were going to say 1. I thought you were saying 1 for a second. I was like, wow, you're really going the other way.
Check. Oh, 12.34.
12.34. Interesting. Of course, an interesting time to be looking forward, yet as it always is in VIX. We got the inauguration behind us now, but we do have earnings coming up. Earnings is, as a driver of vol, has been somewhat lackluster the last year or so. There's been a few big moments, but outside of that, it's been kind of meh. We have some Fed stuff on the horizon, but in terms of what's playing in to next week, I'm not feeling the vol love that the Russell is. I'm going to go a little bit to the south. The question is, how much to the south? Do I want to go all the way Mexit or a little bit shy of that? I'm going to go a little bit shy of that. I'm going to say 11.55. There we go, to mix it up a little bit away from the round numbers. All right, listeners, tune in next week to see who is the most prescient amongst us. Hint, it's not going to be Dr. VIX. All right, here we go. There we go. That's what we're looking for. That, of course, that music means we've come to the close of yet another interesting journey through the world of volatility, talking all things Trump and the inauguration and its impact on VIX Futures and VIX Options. Mr. Rhodes broke down a little bit of some VIX weekly options lighting up this week, including some VIX verticals out there. I broke down all the hot VIX strikes. Feb call is lighting it up, but that continues. We might see VIX get a little more call heavy right now, not so much. Commodity vol, also an interesting beast, no matter where you look, if it's gold, if it's crude, or if it's Treasury VIX, by the way, of course, come back 1:30 p.m. Central for TYFO, where we get into all of that in a lot more detail. Turns out all you guys are leaning to the dark side when it comes to trading earnings, so interesting stuff. Mr. Rocklops, you got some umbrage, always nice from our audience. And of course, we peered into the future to attempt to determine what vol has in store, and we'll see who's right next week. But before we go, we'll check back in with my cohorts here. Let's start with you as our guest, Mr. Rock Lobster. You're talking about your vol masterclass. Where is it? When is it? How do people get it?
Well, it's already started, but you can still jump in because we do record the content. It's 10 weeks, and we are talking about everything vol as related to the vol products in general. So there's intro and then how vol products work, and just like Ofer said, a lot of the time selling vol or selling VIX options is a good trade. But we're also trying to help, and again, like Russell was saying, getting people to understand relative pricing, what's expensive or cheap relative to actually what is trading or how the market's actually moving. And that's something that's all learnable stuff, which we teach in our class. And we're also going to do a long gamma class, which might be dead by the time we give it on February 4th, if the realized vol stays at 5%.
Yeah, you might want to move that one up a little bit. Just saying.
You're going to show it to you, but there's nothing you can actually trade until next year.
Maybe switch it to a row webinar, a little bit more timely, perhaps. Gamma of the old days.
Nobody cared. Nobody cared about interest rates. And then what's funny is all market makers are position limit on reverse or conversions or something I was hearing. So whatever. I don't know. Somebody got squeezed, but here we are, and let's just kick it to Dr. VIX.
No love for Roe. That said, Dr. VIX holding down the CBOE Live Vol hot seat for this week. He's been talking about some of the new upgrades. He just went out to San Fran, I believe, too, or he's going out there soon. What is coming down the pike from our folks at CBOE Live Vol, and also what's coming up from the CBOE? I believe you guys have a risk management conference on the horizon.
Well, I will tell you that the Live Vol guys are coming to me next week, and we are going to be talking about increasing the VIX Futures functionality on the platform.
That would be welcome. If I could do all of the show from one platform, it would make my life so much easier. So just for that reason alone, do it.
We're getting there. And then the other thing is the risk management schedule came out late yesterday, and I am thrilled. Our keynote is Edward Thorpe, who you know how the Dukes were basically, trading places was basically a couple of traders in Chicago. Well, Edward Thorpe was kind of the guy that Kevin Spacey played in 21. He's the guy that came up with counting cards.
Oh, there you go.
Oh my God. I mean, like his first book was published in 1959. I can't believe he's still alive to come speak, but he's 84.
It's a shame.
Going to be our keynote speaker.
It's a shame our old pal, Mr. Schlesinger, isn't on the show right now. He is of blackjack infamy. Also has written many books on the subject of card counting and blackjack. I'm sure he would be very excited to hear that Mr. Thorpe was coming on to the show. So check that out. If you're interested in all things, search for CBOE RMC to check that out. And, of course, just search for LiveVol. Go to livevol.com if you want to check out the platform that we use pretty much throughout this show. I'm looking forward to if they do add futures functionality that will make life even better on that platform when we're doing shows like this. Livevol.com. Click on that green button and you get it for free. That's a pretty cool deal. So kick the tires and see if you like it for yourself. And on behalf of the Greasy Meatball, actually he's not here, the Rock Lobster, forget about the Greasy Meatball. And, of course, someday in the distant future, Dr. VIX, and indeed myself, I want to thank all of you out there in the listening audience for downloading and streaming and subscribing, and for the hardy souls amongst you who joined us live on Inauguration Day. Thanks to you. Come back at 1:30 for TWIFO, and we'll see you next week for more Volatility Views.
Volatility Views is brought to you by CBOE Live Vol. CBOE Live Vol is the leader in equity and index options trading technology, providing professional and retail traders with the most sophisticated options risk analysis, compliance, and trading tools. CBOE Live Vol offers a broad spectrum of advanced trading technology, including the Live Vol X, next generation execution platform, and Live Vol Pro, the new standard in options trading front ends. Visit livevol.com for a 15-day free trial today. And by Russell Investments, the home of Russell Indexes, which calculates approximately 700,000 benchmarks daily, covering 98% of the investable market globally, including more than 80 countries and more than 10,000 securities. Approximately $4.1 trillion in assets are benchmarked to Russell Indexes. For more information on Russell Indexes and RVX, please visit russell.com/indexes.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/The Options Insider, or via questions at theoptionsinsider.com.